We said $200,000 in December of 2024. And yes, I still think it's in play. What we will need in order for that to happen is to see this strong acceleration of ETF flows that I predict will happen. I think we could get $10 to $20 billion in flows in Q4 alone. If we see that and reasonable corporate and government buying, I think 200,000 is a reach, but still very much possible by the end of the year. I think DeFi, will eventually be 10, 20, 30 times bigger than it is today. Again, imagine a world where 1 billion plus people are using crypto wallets every day for stable coins or to access tokenized stocks. In that world, what percentage of them are borrowing, lending, staking, doing derivative work? It's not zero. And if it's 10%, that's a massive explosion of DeFi uses.
The buzz around Bitcoin is back, and this time it feels different. After weeks of sideways trading, the market is alive again with talk of a breakout that could rewrite history. Investors are leaning in, liquidity is building, and confidence is quietly returning to crypto's heartbeat. From Wall Street boardrooms to Telegram chats, the question isn't if Bitcoin will move, but how high it can go once momentum hits. Every chart flicker and ETF update seems to whisper the same thing. Something big is brewing. Matt Hougan, Chief Investment Officer at Bitwise, isn't backing down from his bold call of $200,000 Bitcoin by the end of the year. He believes the spark will come from a surge in ETF flows that could pour billions into the market in just one quarter. Once that floodgate opens, he says, the combination of institutional buying and renewed retail confidence could push Bitcoin into completely new territory. It's a scenario that feels more like timing than speculation. But Hougan's outlook isn't just about the next price target. He sees a future where crypto becomes an everyday tool. 1 billion people using digital wallets for stablecoins, tokenized stocks, and DeFi services. Not just chasing gains, but living in a financial system that's open, fast, and built for everyone. Stay tuned as we bring you more clips from Matt Hougan's explosive interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
But what's driving this price action in Bitcoin right now?
Yeah, I think there are two things that are going on. One is that the debasement trade has become the hottest trade on Wall Street, right? JP Morgan is writing about it. Everyone is suddenly concerned about fiat currencies. And so they all want to get exposure to the two best plays in that space, which are Bitcoin and gold. For what it's worth, I think that fact accelerates into the end of the year. One thing people don't think of much is that when institutions and financial advisors sit down with their clients at the end of the year, they want to show them that they had the hottest trade of the year. Last year, they wanted to show them that they owned NVIDIA. This year, they're going to want to show them that they own Bitcoin and gold. And so I think that's going to drive additional interest. The second thing that's driving results is just flows into Bitcoin ETFs. We've seen $3 billion in flows in the first 5 trading days of October. That's nearly a record for a 5-day period. We think Bitcoin ETFs are going to set a record for flows in Q4. We're seeing Morgan Stanley and other wirehouses coming into the space. So I'm really excited about that. Flows in the debasement trade, put them together, and Bitcoin's at 125 and going higher. We said $200,000 in December of 2024. And yes, I still think it's in play. What we will need in order for that to happen is to see this strong acceleration of ETF flows that I predict will happen. I think we could get $10 to $20 billion in flows in Q4 alone. If we see that and reasonable corporate and government buying, I think 200,000 is a reach, but still very much possible by the end of the year. In fact, based on the conversations I'm having with financial advisors and institutions, they've now realized that there are 2 major trades in crypto. There's Bitcoin as digital gold, and there's Ethereum and Solana as platform for stablecoin and tokenization. I'll say with my TradFi audience, that stablecoin and tokenization story is almost stronger than the Bitcoin story alone. Certainly on a relative market cap perspective, I think we're going to see very strong flows into Ethereum ETFs. I think we may see extremely strong throws if we see Solana ETPs launch in the next few weeks, which I expect. Wall Street is waking up to this stablecoin and tokenization idea. I don't think it's Bitcoin only. We now have 2 big stories in crypto. and that makes the whole space much stronger. Well, to be clear, I think both ETH and Solana are going to be extraordinarily successful. I think ETH, as you mentioned, has the leading market share in stablecoins and indeed in the tokenized space. It has huge benefits from decentralization, has huge penetration and use, massive developer network. I own a lot of ETH and I'm very bullish on where it's going. I think what I said was Solana is the new Wall Street. By that, I meant that the architecture of Solana is designed to facilitate, sort of instant transactions in the view of the beholder, right? Sort of settlement, not quite settlement, but processing within 400 milliseconds, confirmation in 2 seconds. That is the kind of speed that Wall Street needs. I think both will be successful. I think the wrong play for investors right now is to try to pick and choose a winner in the stablecoin and tokenization space. The right play is to invest broadly in that space and be happy whoever wins. One thing crypto loves to do is to go all in on one asset. It's always and only Solana. I think the easier play right now is just to hold both ETH and Solana. The space is big enough to accommodate two, and we're talking about many trillions of dollars of market opportunity. I think they'll both do really well. The thing I'd shout out for Solana is it's tiny. Right? The thing we forget about Solana is it's 1/25th the size of Bitcoin. And so even a little bit of interest in Solana from traditional investors could really increase that price. You could see a doubling or a tripling of price if it becomes a favored asset amongst TradFi. That does make it unique from Ethereum, which is, of course, about 5 times bigger. Yeah, if you just look at the sort of calendar of SEC time-based approvals, you would think we are a few weeks away from potentially seeing those ETPs. I think that's going to be big in a number of ways. One, it's just an access vehicle, but two, it means that firms like Bitwise and others that are launching will be out there doing meetings with people, educating them about Solana. When I look at Solana right now, I think it's one of the best setups for a crypto asset that I've seen in my 8 years of being in this space full time. You have a wave of ETFs potentially launching. You have really strong treasury companies led by charismatic leaders that are pushing the narrative. You have the stablecoin and tokenization play that people are very excited about. When you put those three things together against an asset that, again, is only a little over $100 billion in size, that's a pretty exciting setup. So I'm very optimistic for Solana for the next few months.
That's the bull case for Solana. Are there any challenges we need to watch out for?
Yeah, sure. It's not the dominant player in this space. Again, Ethereum has a larger market share. Some people are skeptical of it because of the meme coin overhang and the view that it's oriented around that space. It has historically run into technical issues. So there are always risks in every investment. But again, in 8 years, I'm not sure I've seen a setup that's as clean as this. And I'm really excited. So I think layer one thinking from institutions would do that. Layer two thinking would say that proved that it can handle the actual throughput required to do mass tokenization on chain. So I actually find it a very useful example. And as people get their hands around that and they start to see other people embrace it, I think they'll come to that realization. A story as old as time is new technologies first being used for slightly goofy things. People criticize the internet in the earlier days for its primary uses, but look where we are now. I think people will make that realization in Solana. So the initial response during the heart of the meme coin mania was to bucket Solana in that space. But I think people now realize that was just a great proof case of the technology's throughput. I think it's gone from a negative to a positive, and I think Wall Street will realize that as well.
Bitcoin's rise isn't just another rally. It feels like the start of something bigger. As confidence in traditional money fades, the hunger for assets that can't be inflated is spreading fast across Wall Street. Billions are flowing into Bitcoin ETFs, and that momentum is waking up the entire crypto market. Ethereum and Solana are now leading a new wave built on tokenization, speed, and real-world use. What started as a hedge against inflation is becoming the backbone of a new financial era where innovation, scarcity, and belief collide in full force. Crypto's next chapter is unfolding fast, and it's not just about Bitcoin. As stablecoins and tokenized assets go mainstream, DeFi is quietly gearing up for a multi-year breakout. Billions of users with wallets will soon be borrowing, staking, and trading without ever touching a bank. Prediction markets are gaining steam, with major players circling billion-dollar bets. The infrastructure is ready, the tools are built, and now the regulations are finally loosening. While Washington fumbles, crypto is sprinting forward. This isn't hype. It's catch-up growth after years of waiting. And the real explosion? It's only just getting started. Let's watch more clips from his interview.
The other place that I'm spending a lot of time thinking about is what is, again, the second derivative of a massive explosion in people using stablecoins and tokenized assets. And I think the answer there is DeFi. If you have suddenly a billion people that are familiar with wallets and how they work, what percentage of them will move into the DeFi category? I think a very high percentage. So I think if you look at what's going on at something like AAVE with the huge spike in TVL, I think that's just a tiny down payment on where that protocol could be going. I think people haven't warmed up to how much stablecoins and tokenization will drag along the DeFi space. Given its small size, I'm very excited about that space as well. I think DeFi, will eventually be 10, 20, 30 times bigger than it is today. Again, imagine a world where a billion plus people are using crypto wallets every day for stablecoins or to access tokenized stocks. In that world, what percentage of them are borrowing, lending, staking, doing derivative work? It's not zero. And if it's 10%, that's a massive explosion of DeFi uses. I just think that space is lined up well for a many-year bull market. It's not clear exactly which protocols, if they already exist, if new ones will launch, but I wouldn't be short DeFi if you are bullish on stablecoins and tokenization. I think that's missing the forest for the trees. Yeah, look, it's a network effect market, so just look at the largest ones right now. Those are the easiest bets to make, but it's also a very dynamic and early market. So I wouldn't by any means buy something and then go away for 5 years and look back and see if you got the winner. I think this is a space where you want to diversify, own maybe the 5 or 10 largest assets, and periodically update your view, because a hyperliquid can come out of nowhere with a great design and a great community and become systematically important. But most crypto investors, burnt by the aftermath of DeFi summer, have taken their DeFi allocations down to zero. I suspect that that's the wrong place to be, given where this market is going. Look, I think the world wants prediction markets. They're incredibly useful. They're incredibly useful for investors. We've seen how much Polymarket grew sort of with no regulatory clarity. As we move into a space where that's fully accepted, this space could multiply by 10, 100x. I think it's a great investment by ICE, which is a very savvy operator. Congrats to the Polymarket team. We haven't yet seen what prediction markets can do. They've been constrained not by demand, but by regulatory restrictions. Those are being lifted. And so this space is going to grow dramatically in the next few years. It's a great sign for the market. The thing about crypto is we had years where regulators wouldn't let us do real world applications, but the infrastructure kept getting better and better and better. So we created this incredible highway, these incredible tools, and suddenly the regulations have lifted so we can now do things. So I think what you're seeing now is sort of catch-up growth for the 4, 5, 6 years where we were repressed by regulation. Eventually that will level off, but it's still got a long way to go. We still haven't penetrated mainstream use. I think the next few years are going to be pretty exciting. I actually do think that if I were to single out a risk to this market, that's probably the biggest risk right now. And Washington is, of course, closed right now, which is a reminder of just how dysfunctional it can be. So you can't have certainty, even when there is broad support for something like the Clarity Act. You can't have certainty it will get through. And if it doesn't get through this year, do we get towards elections? Does it grind to a halt? You can never overestimate Washington's ability to mess things up. And I do think that is a risk that could take some steam out of the market. Obviously, I can't share anything that's not publicly available, but I would just say, the government is shut down right now. So the ability for things to move through the SEC is hampered. We remain optimistic about our efforts to uplist the Bitwise 10 crypto index fund into an ETP. I think it would be great for investors, but we do need Washington to get its act together and open the doors.
The market just delivered a clear message that conviction now outweighs fear. On Tuesday, while Bitcoin and Ethereum prices slipped, investors didn't flinch. They doubled down. Spot Bitcoin ETFs recorded $876 million in inflows as prices dipped from around $124,000 to below $121,000, according to Farsight investors. Ethereum ETFs followed with $420 million, marking their strongest inflow day of the month. Combined with Monday's $1.2 billion surge, more than $2 billion has flowed into Bitcoin ETFs in just 2 days. This is not impulsive retail buying. It is calculated institutional accumulation. Bitcoin's brief pullback only seemed to strengthen investor appetite. The sharp 2.7% drop in Bitcoin and 5% decline in Ethereum didn't trigger panic selling. They triggered strategic positioning. These inflows highlight how professional investors are now treating crypto volatility as a feature, not a flaw. To them, a dip is an entry point into assets with long-term asymmetric upside. The same mindset that fueled gold's decades-long rise is now fueling Bitcoin and Ether accumulation. Wall Street seems to have accepted that digital scarcity is an essential hedge against the unpredictable trajectory of global fiat currencies. This pattern reinforces the perspective shared by Matt Hougan, Chief Investment Officer at Bitwise, who recently said that Bitcoin and Ethereum have evolved into the two defining trades of this decade. He described the debasement trade as one of the most powerful narratives now dominating global finance. Institutional desks that once dismissed crypto as speculative noise are now actively seeking exposure to hard, programmable assets. Hougan's forecast of $10 to $20 billion in ETF inflows during Q4 no longer sounds far-fetched. The momentum seen this week already places Bitcoin ETFs on track to set quarterly records, while Ethereum's growing ETF market is rapidly closing the gap. But the real story extends beyond inflows and price targets. The rise of spot ETFs marks a turning point in the legitimacy of digital assets. These funds give pension managers, hedge funds, and financial advisors regulated, liquid access to crypto exposure without custody or security hurdles. This accessibility is unlocking massive new demand, especially as global markets look for protection against rising government debt and the steady dilution of national currencies. Ethereum's strong showing reflects another shift. Investors are beginning to appreciate its role as the base layer for tokenization, stablecoins, and decentralized financial infrastructure. Platforms like Solana are joining that momentum, creating what many now see as a twin-engine system: Bitcoin as digital gold and Ethereum as the programmable economy. The takeaway is clear. The old market rulebook no longer applies. Billions flowing into crypto during a correction show that this industry has entered a new phase. Bitcoin and Ethereum are no longer outsider assets. They are anchors of a modern portfolio strategy. Every dip is no longer a warning. It is an opportunity to join the next great financial revolution. As we wrap up, do you think Bitcoin can actually hit $200,000 by the end of the year? Or is this just optimism gone wild? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.